Hello and welcome to Ticker Tapes. Today we're taking a look at the world of high growth stocks. As we approach the end of both the month and the first quarter, it's a good time to look back and see how the sector has fared. Growth stock performance in March has probably exceeded investor expectations at the beginning of the month. After all, a war had just started in Europe, inflationary pressures were mounting, and the Fed was about to raise interest rates by an unspecified amount. Fast forward 4 weeks, and the issues confronting the equity markets don't seem as daunting as they did on March 1st. In fact, looking back, growth stock performance over the month could even be viewed as slightly disappointing. We say that because RPG, the Invesco S&P 500 Pure Growth ETF, has added just 2.5% over the last 30 days compared to the 3.93% made by its stablemate QQQ, the Invesco Nasdaq 100 ETF. That feeling is likely to be reinforced if we look at the performance of individual stocks as we move towards the end of the first quarter. Tesla, which is, of course, the most prominent of high-growth stocks, jumped by 24.79% during the last month, and names such as CrowdStrike, Dexcom, and NVIDIA all posted solid double-digit returns during March. Those stocks have something else in common. They are all high beta names. Beta is a measure of how a stock responds to a move in a sector or index of which it is a member. High beta stocks typically have a bigger stock price reaction to a given move in an index, such as the Nasdaq 100, compared to their low beta counterparts. And in a month when Nasdaq added just under 750 points, that's meant outperformance from these high beta growth stocks, and that's a trend we should be paying attention to as we move into the second quarter of the year. However, just as investors get to grips with the challenges that confronted the market in early March, new concerns are looming into view. Tesla has been the subject of positive broker comments in the last week, with RBC Capital, Bernstein, and Wedbush all putting pen to paper, and there are also reports that Tesla will seek permission to enable another stock split in its shares. However, the company is to suspend production at its Shanghai Gigafactory as China's largest city moves back into lockdown. The shutdown is initially scheduled for just 1 day, but could be extended. Apple is also said to be reducing the production of many of its products because of ongoing lockdowns in China and uncertainty caused by the war in Ukraine. These are just temporary measures at the moment, but they serve to remind us that the global supply chain remains in a fragile state and is still vulnerable to interruptions by external forces.